Hey, Bruce, thanks so much for joining today.
Yeah, I'm happy to be here. Thanks for inviting me, Jeff.
Yeah, I really appreciate it. I know you're a busy guy. I was very interested in getting you onto the podcast. For the listeners who don't know Bruce Cleveland, he's a veteran within Silicon Valley on the venture side as well as an operator. And Bruce, if I miss anything here, definitely fill me in. But just to give a little color to your background, you've been an operator at Oracle, Apple, Siebel, and C3.ai. Most everybody knows these very large companies, and I know you've been instrumental in their growth. And Bruce has also been on the venture capital side at Interwest Venture Capital Partners. You also started your own firm, Wildcat Partners.
Yeah, Wildcat Venture Partners. I joined.
Wildcat Venture,
Two smart guys started it and asked me to, I don't know why, but asked me to join them.
It's great experience that you have. You've been on both sides,
Yeah.
operator and investor. And now you're an advisor, and it sounds like you're jumping back into the entrepreneurial side of things with Traction Gap Partners. You can't seem to shake it.
No, when I retired from my last corporate job, which was Chief Marketing Officer for Tom Siebel at C3.ai, and we were able to successfully take the company public, worked for another year this is just after COVID. I had to build out the team. I knew that I wasn't really going to retire. What I really meant was I didn't want to work for somebody else anymore. I like working for other people, but I want it under my terms. And so in venture, you work under the terms of the limited partners and your co-partners. And then obviously in corporate, you're working, even if you're the CEO, you work for the board and work for your customers. But in the net of it, I wanted to control my day. I wanted to figure out, I wanted to do the things that I wanted to do. And I felt that the timing was right.
Yeah, makes sense. I think you and I are both in the same boat. If you don't mind, I'd love to start with the book that you wrote a couple years ago. And for everybody, it's called Traction Gap. I'm biased to it because not only is it a great read, but I actually use it very regularly in all of my workshops that I do at Berkeley's Skydeck Incubator. If you're a founder, early stage startup, you have to read this. We'll talk a little bit more about it, but I'd love to hear in your own words, what prompted you to write the book? And maybe could you share a couple of key points from it?
Yeah, sure. When I joined venture capital, I'd never really been involved with any venture capital backed companies per se. Oracle had a little bit of venture. Siebel, I think in the very beginning had some, but not like what we would all expect, where you've got a board of venture capitalists. You've got 2 or 3 or 4 different partners from different firms. It just wasn't a community that I had been involved in because I was involved on the operating side, and the companies I had been involved in didn't have really venture capital. So it just wasn't a community I've been involved in. When we sold Siebel to Oracle in 2006, since I had been at Oracle when it was a company of maybe 100 people and maybe 30 or 40 million. No, it's more than that. I joined when it was around 10 million, and when I left 4 or 5 years later, it was quite a bit bigger than that. But basically, it was a smaller, right? I was there when it was private, and we went public. So I even have somewhere around here, I have the cube with the little prospectus in it from Oracle. I decided that I didn't want to go do an operating job. I wanted to try something else, something different. I wanted to learn something. So I joined Venture Cap. I joined Interwest Partners. And the strange little story there is Interwest Partners was located at the time in the same that was Oracle Corporation back in 1992.
Just Redwood City,
1982. I'm sorry, 1982. Yeah, it was in Menlo Park on Sand Hill. So the weird twist of fate was that Interwest Partners was located in the very same office that I was in back when I was a much younger person. As I always said, the trees were a lot taller when I joined Interwest, and my face was a lot more wrinkled. One of those weird stories. Anyway, I didn't know anything about the industry really. I knew how to build products. I'd been a chief product officer. I'd run engineering division at Apple, and not all of Apple, but a portion of Apple. And so I knew how to build products, or at least I felt like I knew how to build products, but I didn't know anything about venture capital. Certainly, I didn't understand the process of selecting. I didn't understand a lot of elements of what goes into making a decision to fund a team or not. The term sheet, what are all those things? What are those funny terms? What's participating preferred? All these terms that are now pretty dang familiar. But at the time, I didn't know anything, and I thought this would be a great opportunity to learn. I could bring something to the company, the firm. They had not done well in software investing. They had done well in hardware investing. So I brought something something to the team. And so they brought to me, I could learn, right? Mentors for me. And they were pretty good mentors. But the problem is that I went through this process for about 10 years with them. And what I learned over that time was basically we would have these entrepreneurial meetings, right? Somebody would come in, they would present their opportunity for us to invest, usually be a person or maybe 2 or 3 people. They go through a slide deck. And at the end, we thank them profusely for spending time with us. We'll get back to you. And then as soon as the door shut, proverbially, the banter back and forth was, oh, God, that's never going to work. We're not going to invest in that person. And I'd look around the room and go, why wouldn't we tell them? And this isn't the case. I'm creating a falsehood here in that I'm more talking about in general, right? In general, we would not necessarily tell the entrepreneur all the reasons why they weren't likely going to be an investment opportunity for us. And I always felt that was disingenuous. And I said, why aren't we telling them? He said, well, we're not exactly sure that they won't be successful. And if they are, we don't want them to hate us. We want to get another shot, another bite at the apple. And I went, I don't really like that. I like telling very specifically, I like to give feedback at the end of these meetings. And sometimes to my own detriment, I would get some entrepreneurs, by the way, who didn't appreciate it. They would then be upset with me that I called the baby ugly or whatever it was. And I always tried to be very objective about what I said, even though they were my subjective viewpoint. I tried to give it in a way that was hopefully constructive.
That's what you want.
Most people do, but I can tell you for sure there's some people who don't like me because they perceive me as, for whatever reason, they didn't like it. I didn't like the fact that we weren't very specific, and I always tried to follow up on each of the meetings, at least the ones that I brought in, the people who I brought in, to tell them, hey, here's the things that I think you need to work on. And I felt this was generally true across the industry. There's some general partners who are awesome at this, by the way. They do tell you they're really good. But if you talk to a lot of entrepreneurs, they'll confirm they feel ghosted a lot of times, that things don't work, that they're not getting their day in court and they're not getting proper feedback. So
I've been there.
So what prompted me to write the book? I developed over the course of my 15 years as an investor, because I did very early stage. And when I mean by very early stage, I mean it was usually ideas. There was no product, no team per se. There's 1 or 2 people, no revenue, of course, no customers, no real market that you could see, that you could visibly see. So I had to develop proxies for my own metrics about how I would evaluate a team, how I would evaluate a market opportunity, given the fact there were no MBA. But if I had an MBA, I couldn't use the things that you would learn during your MBA process. And even through entrepreneurial coursework, you wouldn't really learn anything that you could apply from your academic training necessarily to these very early stage companies. Otherwise, the failure rates on these things are pretty high. So I developed them over time before I decided I knew I was going to probably wind my venture capital career down, when I had some pretty good success with companies that were just ideas at the time, like Marketo was just an idea and 3 really talented people who built the company, or Doximity, a guy named Jeff Tangney, very talented person. It was just him on a whiteboard in our offices. There was no code. It was just some ideas. I came up with my own way of evaluating whether it was a good opportunity and these proxies. And I decided that my way of giving back initially would be to document a framework I used, a way to think about a company, not in terms of its financing rounds, but in terms of the company maturity. So to go from an idea to a value inflection point that you and I would call minimum viable product, right? We know, everybody knows what that is. I have a different take on it, but people know what MVP is. I came up with some other minimally viable ideas as well. Minimum viable repeatability. Have you been able to produce the product multiple times, sell it multiple times, hire multiple people successfully? Anyway, those kinds of concepts. I decided to tell-all book basically about 4 entrepreneurs who could then apply these concepts, because it would let them operate their companies successfully, let them focus on the right things at the right time. What you're focused on at ideation is not the same thing that you're focusing on at scale. So there's different problems, different issues. So I created a taxonomy to think about it. This traction gap framework goes from ideation to scale, and an architectural structure, product, revenue, team, and systems that are in place in perpetuity, but the different elements take a different point of prominence predicated upon where you are in that maturity process. So I wrote this book And I wanted it to be a prescriptive guide so people could actually look at it and not like a general business book where a bunch of anecdotes and you're trying to figure out how you apply your problem, which do that, right? It's hard to translate those things into what should I do. So I tried to create a tell-all prescriptive guide that enabled entrepreneurs, teams, startup teams, how to evaluate where they are and what they should be doing. I also I didn't say this, but subliminally, I had hoped that the venture community would also adopt the book in the way that they would evaluate their companies, how they would speak about companies instead of in financing rounds, Series A, B, C, which mean nothing other than you raised a round. It doesn't really say all the things that you've accomplished at financing. So I had hoped that venture would do it. I was mistaken because when I wrote the book, I also wanted to feature Wildcat Venture Partners on it and make it a marketing device because we were a startup as a venture team.
Sure.
And I wanted to make sure that we could use it to draw entrepreneurs in because we spoke differently. Maybe not differently than every other venture firm, but I was competing against Andreessen and Sequoia and Excel and all the companies, the firms that we all know. And I needed to apply marketing principles for us and be different and show people how we're different. And the book was a great way to do that. The problem with it, by obviously labeling it Wildcat Venture on the cover, no, Sequoia's not going to go recommend my book. That's not going to happen. So it was by word of mouth adopted at different universities, Harvard, Wharton, University of Chicago, Columbia, Stanford, more as an outside reading list material. Not necessarily, It wasn't a textbook, but it was recommended. I've been invited. I've spoken at all those universities. I get invited quite a time there, at least once a year, at least to Stanford, where I do a guest lecture on it. And it's achieved, I think, its objective, which was to expose what do you need to look like as a startup, in this case, a B2B SaaS startup, and metrics do you need to achieve, et cetera. So I wanted to write the book as a give back and also as a marketing device. And I think it's accomplished that objective, I think, fairly well.
Yeah, it's a great framework and other books that you can read out there, which are like, hey, this is why we were successful, which could be a one-off reason. The framework is very applicable to a lot of startups. And like you said, it shows where they are. They need to be taken into consideration where they are in their ideation of their product or their service and the things that they need to do in order to get to the next step, thus prescriptive. So I really like it. Again, I'll throw it up there one more time. If you're a founder, check it out. Obviously, your experience as an operator and an investor enabled you to write this book. And I'm curious, having been on both sides of the table, as it pertains to scaling companies today, what do you see as one of the biggest challenges facing firms?
I think it's a great question. I think a good example. When first invested in Marketo, the three guys, John Miller, Phil Fernandez, and Dave Morandi, the landscape, the marketing automation landscape, the products that were out there, you could probably count, maybe there's a dozen of them. The most of them, Annuncio, Rubrik, the Market First, these were the marketing automation products that had Eloqua, that had been in play. Mostly, though, it was a failed category. And so nobody really used those products, at least not significantly. That was one of the challenges for building the category. We tried creating and inventing a new category name, which is defining a new category. It's one of the tenets of in the book called Market Engineering. But ultimately, we said, we're just going to stick with marketing. They said they're going to stick with marketing automation because it wasn't a category that was highly dominated. And I remember that maybe a year or so later, there were 20 or 30 companies then in it. And Luma Partners created a Lumascape, which is a landscape of category and then subcategories within the category. And they do this for a variety of different market areas. And I remember looking at the Lumascape and I go, oh, we have a lot more competitors in there. 5 years later, this thing's filled like with 10,000. It's like pixel level companies. It's completely filled in. There's no white space at all. There's thousands and thousands of companies competing for your attention. And they all sound similar, right? Some do more than others. Some have a certain feature. But if you say there's a product for like Frog and SEMrush and then there's Intense. I mean, there's all these different sort of point solutions or what are seeming to be point solutions with companies that then want to expand out from being a point solution to being a full complement, a product suite. That's the problem, that we're not just faced with that problem in market automation. It's in every category. Every single category has been filled with market leaders and contenders and wannabe contenders, et cetera. And the cacophony of noise out there, which is exacerbated through social media marketing, through Google AdWords, which was a thing in 2006, not as big as it is now. And so your challenge as a startup is, how do you differentiate yourself from all these other competitors? And if there are no competitors, these new coding tools like from Cursor and Replit and others, where you can create applications really fast, the pace of change is really quick. And so you have to break through all that noise to potential buyers who are also trying to build their own products, who are also busy, who, and don't have time to really differentiate you from Adam. And so I think one of the things that makes my book, I hope it makes my book both useful and timeless, is that the framework and the market engineering tactics and strategies, while they may use different tools to accomplish different things, they are still incredibly important, which is that we really need to differentiate our company foremost. And we do that by designing a category that's different, or taking an existing category and redesigning, putting new attributes associated. We have to become a thought leader. I don't mean them written by Gemini or T, real authentic, interesting, provocative, new ideas that we're coming up with, new insights that we're generating. We might have it edited by Claude or somebody, but we're not, or Perplexity or whatever. But in the end, we're going to be differentiated. You want people to think about you. You need to go to conferences. You need to write a bylined article. You need to, I don't know about write a book per se, but you need to be on podcasts, on other people's podcasts. And people go, God, that person's smart. What other things are they doing? I want to follow that person. As they say things on LinkedIn that are intelligent. A blog post.
Unique perspective.
Right. Exactly. And so that's one of the biggest mistakes that most startups, and I'll argue enterprise product teams, by the way, this framework and everything we've been talking about is not just for startups. It actually is very applicable to large, mature companies launching new products, whose failure rates hover between 40 and even up to 90% 5 years out. So pretty dramatic. So let's not constrain ourselves to just the startup community here. As we go through this, what are you faced with as a startup is the cacophony of noise, the number of companies that are vying for your attention. And what do most companies do that's wrong? And how come most investors force them to do something that's wrong? We start with demand gen. I call it demand engineering to be the complement of market engineering. But demand engineering, we hire an SDR team. The second we get, or now we hire SDR agents. Right. We generate email, we make phone calls, and we wonder why the conversion rates are like 0.0001, right? And nobody answers our calls. We have lots of prevention mechanisms for that. Nobody answers our email. We have spam filters, and we'll even have agents shortly that vet all of our email on our behalf. Consequently, how do we break through the noise? The way you break through the noise is you present at a really interesting conference, or you go and you give a seminar, or you wrote up that are interested in. You have to do this thought leadership work and have people come to you. Right. So people start coming to you then, and they begin to understand your company, how it fits into a category, your brand, that they begin to look for your category name and you. Then you can begin to convert over into demand engineering, critically important still. But then it's a lot easier. People will open your email. If an email comes in from Salesforce, you might open it because I've heard of Salesforce, or if it comes in from Oracle, right? Or it comes in from some cosmetic agency, whatever it is. They know your brand. If they know the category you're in, they know that they need something like that. They're likely to look at your stuff. And that's what we need to do. We need to reverse this, starting with demand engineering. And then when we get around to the thought leadership or around to writing some of this content, fine. It's just a recipe to spend a lot of equity. My biggest clients, my best clients, are the people who burn through a couple $1 million of equity, basically following the demand engineering and then market engineering. And those are my best clients because they get it. And I know you get it too, Jeff. That's where we have to start. If we want to make the demand engineering work, we got to make sure we got great market engineering in front.
It's interesting that you say that because here at Lead Genesis, we recommend and we implement new processes, tools, and metrics for go-to-market teams. But the issue is that while we're putting out a lot of good content, a lot of startups, they will come to us before they're actually ready to scale. They're not at that point yet. And I'd love to hear your perspective on what are some of the, top 3 prerequisites that are needed before you start scaling demand generation.
Great question. and they're non-revenue related. These are part of the proxies. So what you're looking for is how many people are searching, either conversational search or traditional search, searching for your category name. How many people, companies are searching for your company name? How many are searching for the combination of the two? When they do, when they come to your site, what's your time on site? If you're in B2B, around 2.5 minutes. It can go down to 2, but it should really be around 2.5. That's the median that people spend. That means that you had enough content on your website that people stayed, right? They're reading something, they're learning, they're downloading stuff, they're looking at videos and customer success stories. Then what about bounce rates? If they come in, you should have 25% is really excellent. Most of my clients we start at 60 to 70%. It's pretty bad. And I don't mean by overall, I mean by different pages. You need to look at each one of the pages where people come in, which means that you need to have something at the bottom of each page for them to click on to go to somewhere else on your site. So we're looking for those types of proxies that tell you, A, I'm getting a lot of inbound. That means people know the category. They've heard of my company. When they come, they're not disappointed in poor quality content or lack of content. They don't bounce out. And typically, they download something. They perform some kind of intent exercise. I know SEMrush and Google Console will give you a lot of information around all of these things. I'm just giving you the bare bones, the minimum viable non-revenue metrics that I look for before I advise my clients to begin investing in. I don't mean none in demand gen. I just mean any significant amounts before they do that.
That makes sense. And I think we're definitely on the same page there, because a lot of what we advise our clients to do is to start embarking on what we call, or really common room is really dubbed the term as signal stacking. So we'll start looking for these intense signals, start building them up. The more you can get through founder-led content, the better, your unique perspectives. I think the easier it will be to start building a base of prospects that you should go after.
Yeah.
But I am also curious. There's a lot of technologies like Common Room and Clay. We're big into Clay. There's a lot of technologies that you can use, right? But it does tend to be the shiny object syndrome. And that's a pitfall, assembling too many shiny objects. I'm curious, maybe not on the technology side, but maybe process or anything else. Are you seeing a pitfall today that seems to be persistent among startups that you would advise people to be like, if you see this happening, don't do it?
Yeah, let me see if I can think through the answer to that one. The one mistake that a lot of companies, that the clients that I have, what they make is they try to go to every event. They try to be everywhere all at once at the same time. And that doesn't work. It really is quality. You only have, the thing that we don't have a lot of is time, right? There's just X amount of time that we have. And how we spend that time is critically important. I always advise, I look at all the things, and a lot of them do many different things. And I say, you don't need to do as many things. Let's just do less. Let's do them better. You mentioned something, though, that I think is critically important, which is around the PR front, which is founder. So there's this new idea that these founder-led companies, right? So we have product-led, whatever, founder-led. I think you should keep in your mind a couple of things. One is that for most founders, most startup founders, they're unknown, and so is their company. So it's easier to get their founder to be known up front than it is for the company. I didn't have that issue with Tom Siebel at C3.ai because Tom had built Siebel Systems quite successfully. And so people know him. The people on Wall Street know him. People in cable news know him globally. So I had an asset that I could use for founder. And Tom's brilliant anyway. And he's the one who said to me, I didn't even have to tell him. He said, look, Bruce, a lot of people know me. I want to build a new category for our company, C3.ai. And I wanted to call it Enterprise AI. You're going to go figure out how to do all that stuff. At first, we need to use me. He goes, I don't want to be this. I don't want to be the spokesperson per se. I don't want to be the brand for C3.ai. He goes, but we have to do that. He goes, and I'm willing to go play that role, be the great thought leader, say all these things. He goes, I prefer not to, but I have to. So what I have observed is that some companies, and especially the deeply technical companies, the leader is usually the product visionary. And a lot of times those people can be introverted, not the Benioff. They're not the Steve Jobs. Steve Jobs really wasn't technical, but they're like Wozniak, right? Wozniak didn't want to be the guy.
Sure.
So I think each company, each startup needs to figure out who's going to be their spokesmodel. who's going to be the person that becomes the thought leader. And if the CEO doesn't want to do it, she or he has to designate somebody that needs to become the founder, the thought leader in the industry to be able to start the brand development while you're building the category and the company. So I think that's a mistake that a lot of companies continue to make, is not recognizing. And the reason I call it market engineering, by the way, which stands for category design, thought leadership, storytelling, messaging, and positioning. And the book talks about it in some detail. But the reason I call it engineering is because it's a process. We know what we want to do. It's not random acts hoping that we're going to create a marketing. I've done it for 40 years and I know what works and I know what doesn't work. And irrespective of the tooling that's coming on board, all these great AI tools, you mentioned something like Common Room and Clay and others, great stuff that we can use for vibe marketing or vibe development. The process, though, is relatively the same. Humans haven't really changed. The buying patterns of how we make buying decisions haven't really changed that much. And so we can use these frameworks like what I've created or what Jeffrey Moore created with Crossing the Chasm. By the way, Jeff was a partner in Wildcat. Very fortunate to have had him kick me in the backside to write that book. But the net is that's a mistake, I think, Jeff, that people make, which is not recognizing upfront they need to engineer a market and they need to understand how to engineer it. And one of those things I think is to rise above the cacophony is to create these sort of rock stars, right? These rock stars of thought that become the spokespeople, the ones that the press reaches out to when they want commentary on an article. They're the people who the analysts go to because they say smart things. It's not filled with hyperbole and hand waving. It's filled with factual, credible evidence. Who can do that and are willing to do that are the ones who can help to build their company and brand.
I have a couple more questions and then we'll wrap it up. But I did want to get your thoughts on a new book that you mentioned that you're writing. Do you feel comfortable sharing just a couple of highlights on what it will address and when it might be available?
Yeah, thanks for asking. A lot of people have asked me to follow up on Traversing the Traction Gap and write a new edition, like update the anecdotes and the examples that I have included in the book. And I probably will create something like that, but I wanted to create something new. And so the main protagonist in the first book was the Traction Gap Framework, which is just this taxonomy to think about how we go from taking our idea to scale. And a supporting actor was market engineering. The market engineering is how do you get from ideation to scale and the tactics you use. So I wanted to complement the book, the first book, create a companion book that features market engineering. Because market engineering is something that every company, no matter which industry you're in, if you are in med tech, if you're consumer software, if you're hardware, a chip, a system, everybody needs to do market engineering. And the first book I wrote all around B2B SaaS using this framework. So I wanted to, based upon the interviews I had done, people came back and said, Bruce, your book is actually really good for enterprise products. Now, the metrics are different when you get to minimum viable repeatability or minimum viable traction. Those are two of the what I call value inflection points in the framework. The metrics are different than B2B SaaS for enterprise or for medtech, but they exist. They're the same, and the definitions are the same. So what I decided to do was I would write a new book that would be more generic around market. What do you need to do around these market engineering principles? Dedicate maybe a chapter to Traction Gap Framework, and if you want to learn more about it, go read my other book. And then maybe some chapters. Okay, you're an enterprise product team. How does this stuff work for you? What's market engineering and the Traction Gap Framework for you? You're a consumer software company. How would this apply to you? So things like K factors, virality, which are really critically important for consumer software, don't really have a place in B2B software or hardware. MedTech, different. You've got two issues. You've got a regulatory, you got the FDA, you got to get through a 501k pathway experience. Is it ethical? Is it efficacious? Will it kill you? Safe? And then you have a commercial hurdle, right? Which is, okay, now I got to take it into the market. And those are different issues you have to contend with. I had some of my partners who did that, so I'm pretty well versed on those problems. So anyway, I wanted to do it that way, make the book more appealing, open up like the lean startup that Eric Ries wrote, very applicable, right, to a lot of different companies. And I felt like I constrained the value of the first book by using it as a marketing device for early stage B2B SaaS companies that I wanted to invest in. Now that I'm no longer doing that and I'm not part of a venture firm trying to go invest in these companies, I want to open the aperture up. So students, startups, enterprise product teams of any size could really use the concepts more effectively. So that's what's driving the book. And midway through it, I'm doing interviews with a bunch of different folks for it. And I'm learning a lot through those interviews with people. And I think the book will be valuable. I hope it's as enduring as Jeff's books on Crossing the Chasm or Inside the Tornado. I don't play at his level. He's up here. But at the level I do play in the minor leagues, I hope that my books are able to withstand the test of time.
I think it's definitely going to have a lot of good nuggets, and I'm really looking forward to digging into it. I also understand that you're working on a new way that startups can efficiently tap into specialized expertise.
Yeah.
And can you share a little bit about that?
Yeah, this is really cool. So one of my clients has been experimenting with artificial intelligence. They're all experimenting with it. But in this case, how to actually create agents, intelligent agents. And there's a lot of companies that are trying to do this, but they have a different point of view on it. They want to make sure that the intellectual property that goes into the agent is preserved. And that intellectual property could be corporate intellect, where it's specific information that's only available to the agent within the company, without fear of leakage, without fear that some big LM will then be able to train on that data and use that data. And there's things like RAG, retrieval augmented generation, that are part and parcel with those kinds of concepts, or GANs and other things that we don't need to go into here. But the net of it was these guys figured out a way to do it, and they needed a way to train, because if you're going to do this, if you're going to train on these skill sets, maybe it's marketing skill or sales skill or tax skill or financial planning skill or coaching, yoga, or whatever it is, you need a way that you can capture it quickly, economically, efficiently, that you can ensure it doesn't hallucinate, that the information it gives back is accurate, because you're going to be representing the brand of a human. The agent is basically the digital twin of the human being. And I know for myself, I'm very protective of my intellectual property. I'm very protective of my brand. I want to make sure that if something's going to represent me, that it needs to represent me in a way that I would represent me. I don't want some hallucination that goes out there, because then it's going to be my brand at risk, my personal brand. And I think this is true for anybody who's a consultant or an expert in a skill. I've been working with them to position their company. We came up with an interesting name. I borrowed it from Mr. Don Tapscott, who's a futurist, who's wrote The Future of Digital. Is a pretty famous author, certainly in Canada, but really a very smart man. He came up with the name Identic AI, and I thought that was a brilliant name for a category, because we're talking about these digital twins of human experts. The company I'm working with is called Innovation Algebra, and they've actually built an AI version. They call it an expert model. They built an M of me. It is ingested and processed at this point. Everything I've written, all podcasts I've done, this will be in there. The webinars I've done, the white papers I've written, blog posts, all the things I've done, the book, of course. And the concept here is to make this an interactive agent that anybody can license and use. And the cool thing about it is, unlike ChatGPT or Gemini or Claude, which are all basically you ask a question and then it goes out and it gives you an answer to the best of its ability, these are interactive. It actually prompts you. Because how would you know how to start to build a messaging matrix, for example? That's one of the things that I do with all my clients. First, if you're not even familiar with what that is, then it will tell you what it is and why it's important. It actually becomes the universal source of truth for all your communications. It includes your category name, who you are, what you do, why you're uniquely qualified to do it. So it's a document, right? And it's a living, breathing document, but very few people know how to do it or do it well. And so MyM can help you. Not only can, it does. It can then produce the messaging matrix as an output. It can then flow that into a sales deck, an analyst deck, an investor deck, your website structure. It will analyze your website. I just did this. These guys turned it on me on my new website. And MyM came back with amazing, very relevant instructions on how to modify my website. It was better, okay? And so we also tried ChatGPT and Perplexity, asked it the same prompt that we asked MyM. They came back with, honestly, generic stuff that really wasn't very useful. Mine was very specific. Change your bio to say this and this. You say you do this for businesses of all kinds? No, you don't. You do it for enterprise software. So it went through and it analyzed everything on my website, and it can do this for anybody. And in fact, one of the things I'm thinking about with this digital twin of mine, because it can do many things, market research, generate assessments, do all these different things. In order to get people interested in using it and how to use it, what I might do is just make that thing I just talked about, doing a website assessment, free, just like what SEMrush does. You put the domain in and it comes back and it gives you an interesting overview of your website, errors, warnings, things you might do a little bit, not taste it can do. Well, there are no M's that can do what my M does. One, because it's a compiled executable and nobody has access to all this IP. So I feel protected. So that's one thing that I like about it. Thing is that it speaks in market engineering terms and traction gap framework terms. I have not made that generally available to LLMs. You get very specific feedback as though you were talking to me. And so once you get used to that, maybe it's kind of like with these coders and Cursor, they don't cripple the capability of the application per se. When you start using it, they give you a certain amount of starter coins and you start building it, and then suddenly it's really cool and everything's working great and you like it. Oh, I'm sorry, you've run out. You need to upgrade. You need to invest another $50. That's why these companies are growing like this. But the net of it is, I believe I can then provide this some very basic capabilities that normally take me 2 months to work with a team and cost them tens of thousands of dollars if it's a large company. I can do this for relatively low cost. And if I can get startups and students, especially who want to use this, they're the ones who need this help the most at some low price. I mean, something that's $49 or something cheap, but they get this and they can make it funded as a result of it. Those become future clients of me. So that's how I'm thinking about using this, is not giving away all of my secrets in how I help teams, but I can give away some of these things because they're loss leaders, if you will. They're things that could be really super helpful. I'm confident in the advice it's giving because it's very prescriptive advice based upon my inventory of work. And it'd be hard for you to get me to be part of your team because I can only be part of one team if I'm fully employed there. So that's the concept. And I think other experts I think this is something that you could do. They could build an expert of you and you could say, okay, I'm going to help teams. I'll give them this demand engineering work and they can see how good I am. And then if I'm good, they can hire the real me to help do all these other things. And I believe other experts will do this as well.
It seems like it's a great way to scale, certainly as a specialist or consultant. Question for you, though, is over the years, really the decades that I've been doing demand generation, scaling companies like Responses and Databricks, I've
good job, by the way.
I should have stuck around a lot longer at Databricks. My goodness. But I've developed this framework, right, that I know works for scaling demand generation very efficiently. If I were to share that with this tool, how would I protect my IP? Could it just evaporate because it's being shared out there? How do I put guardrails around it?
Yeah, I actually had this conversation with the team today because what we're going to do is move this to our own proprietary data center when we go to commercialize it. Then you control the sandbox, right? The walled garden. We still have access to LLM knowledge, but we don't want it to be a two-way street. We want it to be a one-way street. And so 2 things. One, because you'll be turned into a compiled executable. So your process, like mine, my process, I have a very prescriptive engineered process for market engineering that I use with every client. I don't really want that exposed. What's different with every client is content, their problem, their market, their product, etc. As long as we can wall in the processes in the executable. So that's not shared. And then the content, because it's not being shared, it's just like we had to create multi-tenancy in SaaS to prevent leakage between companies. This will be multi-tenant as well. So that way you're completely isolated from any other company. So you could have 5 different companies. You're doing these demand engineering projects with them, but you don't want your client data being shared across.
Right.
That's why it's a software business, right? The software executable is the same, but the data is all different. And that's how we're going to prevent.
That makes sense. Yeah. Question is Traction Gap Partners hiring right now?
We are not hiring per se. What I intend to do with this firm you're always hiring. You're always talking to people. But I think Jeffrey Moore has done well with the Chasm Group, where you create people who become intimately familiar with your process. The challenge is always, can other people be as good as the principal? Sometimes they're better, but I've got 40 years of doing this. How do you impart that 40 years of experience? Maybe I will help with that by being a co-pilot with the people I hire. I have a business model around how many clients I need before I need to hire the next person. I'm almost there with the hiring of the first person. But eventually, I'd like this to be both a software business for the EM as well as a consulting or advisory business for the market engineering. I think they complement each other. Both will inform each other, and one will let me scale, whereas they'll both let me scale. But again, if it's human-based, each one of us can probably handle 5 or 6 clients effectively. Beyond that, it becomes challenging.
That makes sense. What's the best way that people can reach out and get in touch with you?
So I have a weekly newsletter. If you go to my LinkedIn, you can subscribe. There often says subscribe to newsletter right in the very front of it. You can subscribe to that. I put out hopefully provocative information for people. You can also come to my website and just fill out a contact form and say, hey, I'd like to talk to you about X, Y, or Z. Or you can just DM me through LinkedIn. I'm very open. I don't hide. Even when it's a venture capital, a lot of people won't let you connect. I'm fine vetting. You get the people who are trying to sell you something or whatever, but I try to make myself as accessible as I can, especially because I still go and I teach students at Stanford and other places. I want them to be able to reach out to me and to be able to help them. And I'm not doing this just for the money. That's not why I'm doing it. I am doing it to give back, and I would like to build a legacy firm on these principles. The more I can get the information out, the more that people feel it's valuable, the better I can grow the firm, and then I can hire. So that's kind of where the status is.
That's great. In closing, I always ask everybody that comes on to the podcast the exact same question. So I'll ask you, when you think of scaling B2B revenue and doing it right, what's the one important ingredient that comes to mind?
Authentic communications. I believe that if you let your SDR team make stuff up, if all the executives in the company have a different way of explaining the company, what it does, either to investors or to prospects or even to customers, it is highly unlikely that you are going to scale well. So it creates confusion in the market. It creates confusion about the business that you're in. It is one common thread amongst all the clients I have. And I always ask this, I ask them this question, which is, can everybody in your company the exact same elevator pitch? Who you are, what you do, and why you do it. And if they can't, you need to fix it.
Yeah. Good luck.
That's it. So that's maybe maybe it's too simplistic of a response, but
It's the simple stuff that people oftentimes they skip over. That's great advice. Thank you for sharing. And we look forward to reading your new book and eventually seeing your M in action.
Awesome. Thank you so much for having me, Jeff. I really appreciate it. I always enjoy doing these things, and I enjoyed our conversation.
All right. Talk soon.
Thank you.
Bye.